Oh, hey guys, it's Keith Allen, and we are back with BitBreak. Once you see this, the path for Bitcoin is going to be clear for sure. Oh man, oh man. Hey guys, it's been a little bit, but we got a lot to get into today. Sorry for a little cumbersomeness on the button pushing, but really, this is a major pivotal time for Bitcoin. If the rally has got you feeling bullish, you're not alone. This is absolutely had a drastic impact on sentiment. You can see it. You can literally feel the hopium in the air. I mean, it's all over social media, and quite frankly, that's usually when it's time to be cautious. If you're new to the stream, welcome, my friends. My name's Keith Allen. I'm a full-time trader. I'm a work-from-home dad, and I am co-founder of Material Indicators. Today, we're going to climb into everything that's going on. We're going to talk about really what's behind this rally. We're going to take a look at technical analysis. We're going to take a look at order book liquidity. We're going to take a look at order flow and try and make sense of it all. And I have been sharing some content with you guys on socials and in the Telegram community that really alludes to what we're running into. And quite frankly, I think that there are some levels here. There's some things in the charts that a lot of people aren't seeing. So once you see it, you can't unsee it. And I think that this is going to give you some real clarity on to what is likely to transpire here as we see this price action develop. Because let's face it, every rally at some point has to find resistance, and we need to know exactly where that's going to be. We need to know what's driving this. We need to know where resistance is. We need to know how strong that resistance is. We need to know how the order flow and the order book liquidity is participating relative to the price action, and what might happen next. So as always, I will try and give you, not try, as always, I will give you an unbiased view. We're going to look at the bullish, we're going to look at the bearish, and put it all together to help you make some decisions. Before we climb into the charts, do me the favor of smashing the buttons. Help me grow this channel by, number one, hitting that like. Hit the subscribe button so you never miss a future stream. And if you would, let's just take a second and drop this thing. How about sharing this with somebody that you trade with, one of your buddies who trades, or maybe in one of your crypto communities, and we can grow this channel together. I do this for free for you guys. That's all I'm asking for in return is just a little support to help me grow the channel. All right. So where are we going to start today? I think I want to start here on a candle chart, and I want to go try to go pretty basic here and build in the structure, if you will. Been doing that lately, and that seems to be working. So let's start with just a simple view of the structure. I got to share the screen here. Where's all my stuff? Let's go with this one right here. Share screen. All right. And as I said in my post earlier today, the more time I spend with this chart, the more things really come clear for me. And we're going to look at it across multiple time frames here. And the first thing, and this is of macro importance here, okay, because there's a couple of forces at work here, and some of them are extremely bullish. Not just the price action here, but what's happening beneath it and around it. So for starters, what we have here is our macro structure, long time trend, long time uptrend for Bitcoin. This dates back to 2018, even gives us the COVID crash here, and of course our most recent bull market that started, really that rally began in 2022 after the FTX crash. We're going to reference 2022 and come back to this here in a bit, but in fact, I shared a post on this earlier today too. With all of the talk about, hey, the bull market is back. Let's be clear. We're trending in the right direction for that to happen, but we are far from being in bull market territory, in my opinion, in terms of confirmations. In my opinion, we have had literally zero confirmations that the bull market is back. Okay. And what needs to happen to say, okay, the bull is back, baby, in full force, undisputed, is we have to clear some serious levels right here. And there are a number of hurdles in the way. Obviously, we have the macro trend line and we have the 21-week moving average right here. We have the yearly open, which happens to have, I mean, beautiful confluence. The confluences on this chart are just uncanny to me right now. The 21 week moving average right here on top of the trend line. We have, and then in terms of what it would take to confirm a bull market recovery, we would obviously have to reclaim the yearly open here, which has beautiful confluence with the 100 week moving average. And then we ultimately need to see two components working together. One is this 50-week moving average. Since the very beginning, we said, hey, we got to reclaim the 50-week to confirm that the bull is back. And the other element of that is the weekly RSI. And as you can see right here, the weekly RSI, I'm going to try this little highlight tool. The weekly RSI is now nosing above that level, that 41. I think I have this line at 41.5. Right in this range, 41. This has been historically an RS flip line on bear and bull markets for Bitcoin since the beginning of time. Okay, anytime price is trending below this line, we are in bear market territory, and anytime we're trending above it, we're bullish. Okay, so here's the thing: it's not like I say on candles. It's not where you wick; it's how you close. And we have seen fake outs before where it looks like it looks like the RSI is going to break out above this, similarly to what we see with candles, and then it reverts. And so it is too early to say, hey, we've got a full confirmed breakout here. It's obviously trending in the right direction. You can see it here. I'll even expand it. You can see it is now decisively moving above the this level of the RSI that I've identified, this 41 range. But this has happened before, and we've seen reversions. And here's an example of one that just did a quick, hard rejection. If we go back to 2022, we have something similar here. Didn't quite poke above. Maybe it did at the time, and then it retracted before it closed. And so there's still a chance for this to indeed move higher, but there's also a chance for it to recede back below this line around the weekly close, or potentially just give us this kind of reversion right here. So this is what we're going to be watching. I mean, very, very closely under a microscope come Sunday afternoon as we get close to that weekly close. Okay. And of course, this could change anytime between now and then, right? The higher this goes, the harder it's going to be to recede below this. But anything is possible in this game. You guys hopefully know that by now. So what's behind this? What's behind this move? There's a couple of things, in my opinion, that are really influencing the sentiment here. And one is obviously we have this mess going on in Iran, and there was an attempt at a peace deal last weekend, which obviously failed. And the moment it did, we saw price reject hard. This was really a news-driven reaction. Price fell a good 3% or so, and then obviously we saw a recovery on Monday, and a big one. So why are we seeing this recovery? Well, there's a couple of reasons, in my opinion. One of them is that while the deal didn't fall through, we're still in a ceasefire, and the U.S. is posturing to clear the Strait of Hormuz, which then returns the flow of oil. Now, obviously, there's this ridiculous blockade of the blockade going on right now, which nobody really understands. But it has been expressed that the U.S. Navy is going to clear the Strait of Hormuz and then guide commercial traffic out of the strait. That obviously is bullish in terms of supply chain, not just oil, not just the energy crisis and the price of oil and the price of gas, et cetera, but also relative to other supply chains that flow through that strait. And there's quite a bit. So that is, at the moment, bullish. but certainly not anything that we can bank on at this stage because we know how this works, right? The other thing is the Clarity Act. And I posted about this, I think yesterday, where I wasn't really sure if price is baked into the Clarity Act right now. So for those who may not be aware of what's happening, the Clarity Act is once again being put in front of the Senate Banking Committee, and there have been previous blocks to passing that bill as is because of the stablecoin legislation that's written into it. Crypto industry, specifically Coinbase and crypto traders like ourselves, are interested in maintaining a yield on stable coins. There has been an issue where the banking side of things don't like that. Because why? Because it puts crypto exchanges directly in competition with banks who are not paying 3%, 4% on USD or on stables. They're paying 0.01%, 0.05%. Maybe you're getting, if you have a huge account, you're getting up to 1%, but those are few and far between for the average U.S. banking customer. So there's been a stalemate on that. And so it's not clear at this point because last week, U.S. Treasury Secretary Scott Bessent said, hey, it's time to pass the Clarity Act because they're running out of time to do this. They know this. And banks are waiting in the wings to come in. Large institutions are waiting in the wings to come in. And it just hasn't happened yet because they're waiting for this legislation to pass. They want the clarity that it's safe to do so. And now, right after that, Brian Armstrong from Coinbase said, hey, yes, it is time to pass the Clarity Act. So without giving any context as to what might have changed in the draft of the bill, right? So did they come to an agreement? Did something change? Did they come to an agreement and not tell anybody yet? Or did they just put pressure on Coinbase to accept this deal as is? Or is Armstrong just saying, yeah, guys, right, it is time to pass the act, and you guys need to come to the table and meet us in the middle because you haven't done so yet? None of that is clear at this point. And so we're waiting to see how this develops. And rumor has it, we've got a week or two for them to get this passed. If it's not done by the end of the month, rumor has it, it doesn't happen until 2030. And if I'm not sure why that is the case, maybe there's some legislation, maybe there's something written into it already. I don't know. But it does need to happen, and it needs to happen quickly. Otherwise, there's going to be an unwinding, I think, at the institutional level that's not going to be good. And whether there's an unwinding or not, it really is not going to allow the ushering in of this next wave of institutional adoption that we're expecting. And quite frankly, we're expecting a tsunami of institutional adoption to come in after this bill is passed. So with that in mind, as I've watched price action develop here these past couple of days, I'm really starting to think that this rally is actually the baking in of the Clarity Act. And so that maybe we aren't just going to see just a huge rip out of here. Maybe it's going to be a sell the news event. And that's what I'm positioning myself for in terms of the Clarity Act at the moment. Now, let's get the narratives out of the mix, because the charts, the technicals, the data is what really tells us what's happening here. So that's what we're going to focus on now. But now you know what is potentially driving this price action here, since we found a base, and we found a base actually around a historical level that's pretty interesting. That, of course, being 69K, the 2021, which was the 2021 top. And we most recently got something in here that helped build strength in that support level. Doesn't necessarily mean it has to hold indefinitely, but right now, behind this is the new timescape that we saw formed just last Monday at 69K, right on top of the 2021 top. This is really a significant level here because we've had so much consolidation in that range, not just recently, but of course, after the after the 2021 top, we formed a cup and handle in this range, and prices, of course, appreciated out of there since then. Um, where's that guy? Right? R- Geez, what's up? 2024. We made it up to this, up to 69K, and formed this handle that obviously, you know, came out from there. And so maybe we can see it better if I zoom in. And so this was a big deal, right? We had this cup and handle form, and you can kind of see the handle formation, and we got it to a into a new all-time high, right? So that was a major level, and the fact that we got that we got that yearly open, excuse me, that Q2 timescape level here, really rather important. So here was that 2021 top. Here's the cup. Here's the handle, and the rest is kind of history. Needless to say, this is a very important level here at 69K. And the fact that we have a new timescape level here adds some serious strength to this level, in my opinion. And we're now seeing this rally come out of here. Now, it's reasonable to expect a support test back down in this range at some point in time. Hasn't happened yet. So there's that. We did actually trade around here just a little bit here for a couple of days, but again, this level was formed on the first weekly open of the quarter. Right, we have two timescape levels that form quarterly. One on that quarterly open, and one on the first weekly open of the quarter, and those can be seen very close together here. The quarterly was at 68.2, and again, that first weekly open at 69. So a little bit of a support test here that day after. So maybe that serves us well. Maybe, just maybe, we need to see it again. At the moment, price trying to push above this 100-day moving average. Currently, it's there, but we've had one rejection already. Again, the wicks don't count. We got to see where we close here. But I fully expect to move a bit higher into this structure, which now sits at closer to 78K. I would say, 77.5 right here at the moment. But let's look at something. So in terms of the structural integrity of what's happening here, a couple things come to mind here. One, so as I mentioned at the top of this, we have confluence between the 21-week moving average and the top of the structure here. And look what else it has confluence with. It has confluence with another timescape. So we're talking what? 70, high 77s, almost 78 here. And then here at 79, we have both both the 21 moving average and the confluence of this Q2 2025 timescape level. This is just more structural integrity in this level, making resistance stronger and stronger. But there's more. A lot more. Let's introduce or reintroduce a level that we have been watching here recently, and that is this bear flag. Okay, we can see it pretty prominently here. We've been talking about this for quite a while. Actually, this has been about 90 days. And so we're now approaching the top of that structure. And look at where the top of that structure sits right now. We have all of this confluence between the top of the macro structure, the top of the bear flag structure, the top of the 21-week moving average, and the 2025 timescape level. Okay, so that's four heavy structural things. Count them. Four heavy structural things right in our way to that bulls need to clear to actually even have a shot at having the conversation about a potential bull market recovery. Because even if that happens, we've got to clear this 2026 yearly open, and then we have to clear this 50-week moving average. That's a long way away. That 50-week moving average is right around 97K right now. Yearly open at 87.5. Okay. Let's look at one more thing. I want to show you some more confluence. Look at this. This is the 200-day moving average, and look where it sits. Perfect confluence with the 2026 yearly open. So if we do make it through here, this will be another area of very strong resistance that bulls will need to clear to have a shot at getting to that 50-week moving average, which sits again at roughly 97K. All right. So there's a lot between here and a potential bull market breakout. Now, what's happening over on ETH? Similarly, and to be honest with you, I'm doing this live in the fire, but it's pretty similar in terms of structure. We can see it looks like ETH has doing a better job of trying to hold above that 100-day moving average. But it also is going to run into structural resistance along the macro structure with some confluence that includes timescape levels. And let's look on the weekly and see if we have some. Oh, lo and behold, would you look at this? We have the 200-week moving average coming into focus here at around 2,500, just below that, actually. And we have the 21-week moving average, which has perfect confluence with the top of the macro structure trend line. That is at that's at 2,500. Excuse me. What did I get wrong? Okay, so the 200 is at 24, about 2450. The 21 is at 2,500. So very, very strong resistance in this range right here. Doesn't mean it can't be broken, but it's going to take a hell of a lot to do it. And so far, we haven't seen that. So now let's take a look over at the order book and see what's happening in terms of liquidity and order flow. And as you can see, the order flow is looking rather bullish, right? We have seen whales and mega whales buying through the range there, but I'm not going to lie, there has been some buying of dips and selling of rips along the way. It's logical to anticipate some profit taking at these levels, right? We're the top of the structure. We are at macro structural resistance coming into focus. So it does make sense to have some distribution up at this level. And as you can see, it looks like purple whales, especially, doing some selling up in this range around these highs. So be mindful of that. It really is going to take and look at the order flow. I mean, the order book liquidity. It's stepping up to try and support the next move up through this liquidity up into this 78K range. Right now, the concentration at 77. We had more at 76. It's been broken. It's now replenishing a bit. Not a ton of liquidity here, though. It's not going to take much to break this if bulls have the momentum to do it. So you'll notice that as price moves up, we start to see liquidity come into this, start to come into this range. Nothing changes sentiment like price movement. Okay, so be mindful of that. This stepping up of bid liquidity, that is an indication that price is going to continue to try and push up higher. And as is the bullishness of the order flow, right? We saw buying. We've seen a steady flow of buying, a little bit of profit taking at the key levels as anticipated. And I would expect to see that at every level there above, right? 76, 77, 78, every one of them, we're going to see some profit taking. Now, if price can push above this, then we have maybe a different conversation happening. If price can push above that, then we have really a good probability that price can move into this yearly open range. And so if this happens, if price pushes above this structure, I expect to see longs aping in. You know that shorts are already like prepared here, but I would and they're going to get squeezed. And so because of the way that this market likes to behave, it's reasonable to expect a short squeeze up from this level. I mean, we're seeing one now, and this could extend. It could certainly extend up to this range. And so I'm not saying that it's impossible for us to break this and to break this and to have a full bull market recovery. And quite frankly, the wild card there is this war. If the war ends, then sure, that's a great tailwind for this to happen. But that again is something speculative. So I watch this level by level, range by range, and this is the range that we're focused on right now. Hands down, the most important level in the chart. Now, I want to take it back to 2022 for a moment. We talked about the RSI, as you can see here. It's poking back above that key level. But look at what happened back then. Okay, we had a lot of the same things. I'm going to take timescapes off to clean this up a little bit for you guys because I know it's a lot, but these levels are important, and that's why I keep them on the chart. So this has happened before, and I've said you can't bank 100% on history, right? Just because it happened before doesn't mean that history has to repeat itself. But it's following a distinct and direct path that literally is mimicking the former price action. So until we see a deviation, why would we change our analysis? What would cause us to change? Just because we're getting excited that price is moving up and our bags are recovering? No. This could be the nastiest trap of all time, especially if we break above here and have a potential fake out up into this range up here. But look at what's happened here in the past. Okay. And I'm going to show you exactly this was the all-time high back in 2021, all-time high at 69K. And we saw the degradation of price action. And this took from when? From November, beginning of November 2021 through the FTX crash and ultimately bottomed literally a year later. It was a full year. So here we are here in 2026. We topped in 2025, October 2025, and we're now 6 months into what typically takes 10, 11, 12 months to resolve. And so if we're still believing in the 4-year cycle, and so far we have no reason not to. A lot of speculators go, oh no, we're breaking out. It's done. 4-year cycle's broken. But there's literally no confirmation of that. We're still in it. Okay. And so this could be breaking down from here. And if we go back to 2022, we can see where the RSI did come close to those recoveries. And we can see where we had even the same type of death crosses, right? We had the green 21 day cross the red 50 and price came down. We had the green 21 cross the red 50 and price came down. We had the weeklies, those are weeklies. We had the green 21 cross the blue 100 and price came down. We've had the green 21 cross the blue 100 and price really hasn't broken down yet the way we expected it to, because we've had all of this manipulation with the war and the Trump deals and whatever. So historically, this death cross does not have to have this kind of outcome. In fact, there are times where it found the bottom, right? And here's an example of it back in 2018 when it took us to the last consolidation. So that could be the case here. We have something, a bit of conflicting, right? There's not enough history in this to go, oh, it's going to happen this way every time, because it doesn't. Back in 2015? It was like a week to one more candle down after that, and then that was the bottom. And so maybe there's a lot of things that are bullish here in terms of the structure down by the 200 week moving average, down by the lower trend line, et cetera, et cetera. And the fact that we're holding at this 69K level at this point. I mean, the actual bottom came in at 60K so far, at least our local support level. Didn't quite touch the levels that many of us expected, which was the 200 week moving average and the trend line, which was closer to, at the time, 58K and now sits around 63. And so will it happen? That 200 is actually down at 60. The trend line's at 63. The 200 week moving average is at 60. And so there's a number of forces at work here. The measured move off of this bear flag, should it validate, and quite frankly, breaking out the top here would invalidate it. But a measured move off of this would indicate the same length of the downside to the upside, right? Same length of that handle. And if we moved it to a breakdown position, that would get us down to about the 40K range. I think I'm a little stronger here than I was in my previous drawing. Let's see. Okay. Yeah. I actually want this to be from here to here. And so let's see what that looks like. This is about a 33% move. And that would get us to that mid 40s range. Again, depending on if and when we break down from here. So this is a potential target, in my opinion. Does it have to happen? Of course not. Nothing has to happen. But if things play out as they have historically, then this is certainly something to consider in the cards. We're going to know very, very soon if we get this rejection here or if we have a breakout, So watching that closely. Let's go back to the historical data and see if we can draw any other conclusions. So from this, back on the weekly time frame, we can see, I get this out of here. We can see that after this, let's imagine that this attempted breakout on the RSI down here is what we're seeing right here. And at this time, look at what we saw. We saw a rally up to the 20-week moving average, a rejection, and the last leg down into a consolidation, and then the rest was history. So look what's happening right now. We're rallying towards that 21-week moving average. So again, history doesn't have to repeat itself. It doesn't have to mimic. However, so far, it looks a lot like what we saw back in 2022 when price did indeed rally right into the 21-week moving average. Actually took 2 weeks to do this. And on the third week, it was a rejection. That would play out right into the end of the month here. Again, maybe it happens the same. Maybe it's not the same. But you cannot ignore that it is damn near identical to what we saw in 2022 right now. So I don't know how anybody can look at all of this, look at all the historical similarities, look at all of the confluences between all of these strong structural resistance levels, including the timescape levels, the moving averages, the macro structure, the bear flag structure. It's all right here, just looking to sucker punch overzealous bulls. So before you ape in, before you buy into the hype, watch what is happening here very, very closely. And watch what is happening with order book liquidity. Are we going to start to see this build? Are we going to see it build higher? Are we going to see it start to concentrate more at these levels? Are we going to see the order flow change? Look at what's happening at the moment. Again, a little bit of profit taking happening here. So this does not have the DNA of a zealous breakout, in my opinion. So at least from the whale side. So, if we look at some of the order classes, some of the other order classes, we can see that there is a lot of TWAP activity going on here out of some of the other order classes. That's certainly something to be mindful of. We can see that we have some significant order flow happening in terms of ETFs. And look at this. 13th wasn't so good. What's happening today, right? This is not confidence right here. So be mindful of that. Today will probably be a bullish day because the market is bullish and people think it's all going to be a breakout. But I'm telling you, man, don't rush into this. Go at it with patience and discipline, and be mindful of these key levels right here. This RSI, not today, but at the weekly close, and the order flow, which is rapidly starting to change. We have some distribution happening in this level right now as we speak. In an hour from now, we get down here, we could see a reversion, right? Another surge up top. Anything is possible. But just know that the resistance stacked in this chart is undeniable, and it is going to take a lot more to break than most people think. People are looking literally at just the trend line. And the fact that it's the macro trend line makes it very, very strong. But you have got to understand that there are layers and layers and layers of technical strength in this level right here. The timescapes I just pulled out of it. But look at this. 4 things. Bear flag structure, macro structure, 21-week moving average, and timescape historical structural resistance all converged in one very tightly compressed range. With that, I'm going to wrap it, my friends. Hope this gives you some insight and some things to focus on over the coming days and weeks. End of the day, I'm trying to keep you from getting wrecked. If I'm wrong on all of this, hey, I'll be the first to admit it. But I've got a lot of conviction on this at the moment. Maybe it doesn't pan out the way that I planned, but so far things are continuing to develop just as they have historically, and I see no reason to deviate from the plan. Stick to your plan. Have a contingency if things move against you. And if that happens, let me tell you what my plan is. If price does move against me, here's where I'm going to wrap it. If price does move against me and we break above this yearly open, what I would anticipate to see is, a break above this open, there would be such an attractive short, right? But what if things really go on? So what I would anticipate to see is, this was the yearly open right here. Let me go to the daily and you can see the timescape level. We have this 87.5 level, right? And then we have another timescape up just above that at 91, about 91.5, let's call it. So if price moves against us, what I would expect to happen is obviously a resistance test at this 87.5. If bulls manage to flip that, then I would expect to see a retest before price clears this 91.5. I would expect to see a retest of support here. And if that holds, this is where I'm going long. And if it breaks, I am going to short the Hades out of it. That's the line right there. 200-day moving average has confluence with the yearly open. This would be the level that should be tested. Should price move above it, there should be a support test to confirm it before moving up higher towards that beautiful 50-week moving average that everybody wants to break. That's where I'm going to wrap it, my friends. Couldn't leave any more with you for now. But if something changes, if something develops, I will do my best to chime in and keep you guys updated. If you want to stay updated all the time, join us in the Telegram community. It's absolutely freaking free. Links to it are in the description. And of course, if you want any of the tools I shared with you, you'll find links to those in the description as well. Hope this helps you trade smarter. Thanks for the support, guys. I really appreciate it. We'll talk to you soon.